What's going on, guys? This is CA Trades with another recap. This is Wednesday's trade. I'm a day late on the post. Sorry about that. I'm a little busy. Personal life. We'll just hop right into it. So, market still in a downtrend, but very aggressive downtrend now. We see a huge drop off today. We scale down to the 5 minute. What do we see? So, going right into it, on hold on, we gotta switch this to ES. Get a view for SMTs. Okay, so going into the day, we see at market open a huge SMT lagging on ES, and NQ is the non-lagging, so it gives us our daily bias and confidence on what we want from the market and which index we are going to trade. So we scaled down on this huge move. We see that it is caused. Here, we'll just do NQ now since we're focused on NQ. We see a huge inverse fair value gap, retracement back into a fair value gap within the inverse. So that is called a BPR to shorten it. Then we just see tap-ins right here all the way down. And at this point, a lot of people got off the charts that I talked to. A lot of people didn't trade today because of market structure, a little too aggressive on the downside. I understand that. But I was looking for a trade because, I trade through conditions like these. I'm comfortable with it. I've had years in the market with this and experience. So going on to the 5 minute, we are looking for a tap in or some sort of confluence to give us a move with our bias of going down. We see a fair value gap right here, big, beautiful open one right here, huge imbalance. So we are looking for a tap in. We shoot down, we get a little retracement right here, doji. We didn't tap in here, still waiting. Once it tapped right around, I'd say equilibrium right here, I scaled down to the 1 minute and I'm immediately looking for entries on the shorting side. So go back. Okay, so now that we have our full bias, we have an outside 5 minute confluence. We are looking for an entry internally with the external model, but we want to look for an internal model so it's more of a guaranteed play. It's quicker, and we are in and out of the market with no risk. Well, there's always risk, but less risk. We want to take as little risk as we can. So right here, we see consolidation, a little bit of accumulation. On ES, we are non-lagging. On NQ, we are now lagging. But it doesn't really matter once we are on a super small time frame like the 1 minute, because that is still a good sign that we are going to go down when there is a bearish SMT like that. Doesn't matter what side you're on, it's still going to go down. So we have this huge 5 minute right here giving us the confirmation of going down. We see this break of structure, and I'm immediately clicking sell with 2 contracts shorting to the downside. Targeting take profits was pretty easy. We used the handy dandy Fibonacci retracement tool right here with the last leg up. And we set our first TP for the first contract exit. And then second contract exit is at relative lows, internal points of liquidity. And we see on the 1 hour that we are actually targeting lows here and here. That's probably what we'll be targeting in the next few days, next few weeks, if we last that long. But if you really look on the 15 minute, that's where the important levels are. Right here and right here are, I think, 2 weeks ago's lows. And market has been shifting down to those lows for the last couple days now, and it's a very desirable place for price to go. So why not go for those lows within your positions? We are now targeting those lows or targeting that direction, but we don't want to go all the way to that direction because there's reversals like these where it just takes us out. So we want to find the small internal moves that pay us out, guaranteed, stick to our bias, and do the simple things. Go on to the 1 minute. We sweep this break of structure right here. We're in. A little bit of drawdown, but that's normal, obviously. Come back down, crush this first take profit. Now, what we do when we do our first take profit, I hope every trader does this. When you're up, stay up. Stop loss goes right here. Why right here? I stick my profit loss very aggressively in the profit because I know some people do break even. I don't like doing break even because I still want to make money. Right here, we have no other confluences. We could put our stop loss here. We're still losing money, and it's a 1 minute order block. How strong is that? Right here is our last leg of protection. We have this huge fair value gap. If it is going past this fair value gap and it's not going down, your trade is probably invalidated and it probably sucks. I have my stop loss right here because that is the last leg of confluences. Right here, we don't even reach. Maybe right here, no, we didn't even reach it. Didn't even get used. So a little bit of accumulation, that's normal in the trades like these. Doesn't matter. We just doom scrolled on TikTok until we saw this move right here, and I was just, happy about that. So we next two candles, we just crushed this right here for a $905 TP across 5 accounts. You do the math. $4,500 on the day. Beautiful progress for the payout. That's our 4th winning day in a row. Beautiful trade. Short and simple. You guys have to stop making it so complicated. If you're struggling with trades going halfway in the profit and then just completely reversing, that's probably because you're targeting too high of a TP profit. You have to keep it simple, take your winnings, and leave. It's like a casino. But with this casino, it's based off knowledge, data, and technical analysis. See, if I was shooting for these lows right here, I would have got, snubbed right there. But we are targeting close lows like these. This one right here. The outliers, the ones that don't look super prominent. Right here, it's probably going to get swept, and it did get swept. But it's not as prominent. I mean, it's not as guaranteed as this type of low where it's like, it's just passing by. You already know it's going to get hit. It's like guaranteed money. We keep it simple. We stay conservative. We're not too aggressive with the take profits. And guess what? That's what gets you 4 winning days in a row. That's what gets you thousands of dollars in payouts. Right here, we see a beautiful move. I mean, this trade lasted, 20 minutes and beautiful payouts. Beautiful payouts all around. Then we swept those lows that we showed before on the 15-minute. Beautiful inverse somewhere in here. I don't know where. Then order block tap-ins on a higher time frame. We swept back up on lunch hour, going all the way up to those imbalances over here. We then carried out to these lows. I didn't trade Thursday, so we are going to wait for Friday's trading day to make our 5th winning day, hopefully. But that's all I have for you guys today. Just take the advice of staying conservative, taking when you're up, and keeping your stop loss once you hit your first take profit in the green zone. You don't want to have a stop loss right here, like right here. It's too boring, and you're not making guaranteed pay. When you're here, I'll take $100 day. I'll take it. It's better than losing $100. And plus, it's still progress to getting paid out or passing your combine or whatever your financial goal is. That's all I have for you guys today. Please take it with a grain of salt. That's pretty much it for today. I will catch you on Friday's trade recap. Thank you guys for watching, and peace.